Welcome to the Entrepreneur Podcast. Today we're going to be speaking with a capital raising extraordinaire, Eric Mattingly. Over time, we've done over $1 billion in deals together. Really, he's there to give you the insight, the next steps, so you can hit your $1 billion as well. Eric, thanks for joining us today. Really appreciate you coming. Just to give a little bit of background, because you've done everything. And it's interesting that the different types of deals are really different undertakings, different sales process, different motivations for investors. Could you share a little bit about your background and the types of deals and what you've been doing over the past couple decades?
Yeah. So just kind of started in the syndication industry many years ago. You and I met back in, I think, 2006. Prior to meeting you for the first time, I was in the oil and gas business for a few years. Backpedal before that, I was doing kind of single family real estate investing and really wasn't able to scale very much. I didn't know anything about working with investors at the time, individual investors, partners in deals. I was using a credit line strategy for the, other people's money. And at the time I owned a mixed martial arts school. One of my students was one of the guys training with me privately was one of my top students. He owned an oil and gas company. I started having some serious injuries, and ultimately he asked if I wanted to come work for him, learn how to raise capital on one of the riskiest investments known to man, and be able to apply that to real estate or, quite frankly, anything. That's kind of where it started. So I worked with him purely on sales, cold calling investors all over the country, pitching speculative oil and gas drilling projects, and raised $10 million over that period of time. Made $1 million in commissions, no equity, no ownership, and hated the investment, but the knowledge was invaluable. And he told me, if you learn how to raise capital, you can apply it to anything. You'll never be broke. And so from there, I parted ways with gratitude. And at that time, that's when, Nate, you and I first met. And you were living in Las Vegas. And we wound up getting coordinated with a group there that was doing a large commercial real estate and business development project with dental centers, which was that was kind of my first experience getting out of the residential investing space, and having an opportunity to apply how to raise capital for oil and gas, but to do it for, other things, and got exposed to dealing with 1031 exchanges, creative financing, and raising money for commercial real estate, as well as capitalizing a business enterprise. And that's kind of how it started.
So we got different risk profiles. We've got the oil and gas, you've got real estate, you've got business. What's the easiest thing to raise capital for? None of them. I know the answer to that.
That's a great question. I mean, and and just forgive me. You've beaten so much how to speak in a language that is vague. So all investments have risk, Nate. And but to be honest with you, any investment does have risk. That is true. But as soon as you ask me that, I hear you like whispering in my ear, don't say that, and blah blah blah. Anyways, oil and gas obviously is super speculative. I mean, it is it makes no sense. I've never seen anybody make any money in it. So highly speculative, commodities, things like that. I mean, It's really, I think what it comes down to is just a confused mind says no. What is the offer being presented? How is it being presented? Is it easy to understand? And so, I think probably real estate is the easiest if you have a reasonable deal structure. And then honestly, raising money for a business, even a startup, if you have a compelling offer and the upside is exciting enough and your marketing materials are good and the person soliciting the capital knows how to sell and how to present. One of the best capital raisers and presenters that I've come across is actually a female that I had a chance to work with, and she was exceptional, and especially raising money for businesses. So I think it depends on a few factors, but that's kind of my opinion on that.
Okay. As you kept talking, I had more and more questions. So I was like, you've got to stop talking for a second so I can ask the 10 questions I have before I come up with 10 more. So I'm going to go backwards because you just said something that was astounding, which was about the woman who was really good at raising capital. What made her exceptional? Let's just start with that.
She would do a tremendous amount, because I've seen her raise capital for a few different startup business enterprises. And just to kind of give you some context, when we were raising capital, we were not the operator. So like my model of what I was doing is we would partner with somebody who was an expert in some industry and was looking for a capital partner wanting to expand. Not so much like startup enterprises, more like a group doing multifamily. We did a lot of multifamily. Of everything we've raised capital for, I think we have done somewhere close to 100 private placements. Nate did all of the securities work. I'm probably 80% of all of that stuff. And I'd say about 50% of everything we did, if not more, was at least 50% was multifamily exclusively. But anyways, so in our case, we would actually be pitching the operator. And so we would be doing deal after deal after deal after deal. So every subsequent deal you're raising money on became easier and easier because your investor base starts getting accustomed to who it is that they're investing with versus doing a single capital raise for a startup business. The amount of front end work you have to do on understanding the deal, understanding all the benefits, understanding the risks and how to present them, being able to convey the message, the amount of research and background. I mean, this girl was an expert at really drilling down into the opportunity, being able to pull it. She made it feel very exclusive, quite frankly, because of it was the ultimate takeaway close where like the general population doesn't have an opportunity to get involved in these kinds of things. We were, solicited by this group to work with them and giving us an opportunity to participate. I mean, just the way she would kind of frame things, and she did real work very quickly. And so, yeah, I sat in on some, I'm not at a point where I want to take substantial risks. So they're all speculative, but they didn't seem speculative the way she was able to present it, but yet still be able to disclaim that you can lose all your money in a way that didn't feel like you could lose all your money. I mean, it's kind of hard to explain unless you just sat in on one of her presentations, but that's kind of the gist of why she was so good.
Could I distill that down for a second? Because for me, what I think I hear you saying is it was a combination of making an investor feel seen, making them feel special, but then also making them believe that the deal was special. And there being truth to that. Like, in other words, I'm not making this up. It's just the way I'm framing it. And so So they're the investor's special. I'm going to make you feel special. I'm going to have an exclusive deal that's not available to everyone. So if you want to get in, this is your opportunity. But then also you said something at the end there that I think is key, acting quickly. Like, in other words, I'm
She
going to
would
assume that
do
means,
she would do
yeah, go
her
ahead.
homework and organize everything quickly.
Okay.
I mean, a
Okay.
tremendous amount of front end work to really understand who it is that you're going to be bringing money to something for. And from the time they would approach, because sometimes I was approached to assist with the raising capital. So I knew when the front end timeline started to when they were holding their first webinar to present it to investors. And I passed because that really wasn't what we were trying to do at the time. We were kind of winding down, raising capital for new deals, but I sat in on them. So that I was impressed with how well it was put together in how relatively short period of time. So she knew how to do her homework, and she definitely came across as knowledgeable. And I mean, it was all true. Everything she was saying was true. It was all disclosed properly. But it was conveyed in a way that made you feel comfortable, understanding that you're taking a risk, but there was a huge upside. I mean, that it's kind of like pitching an oil and gas well, but done in a way more, instead of like a hard ball, ram it down your throat kind of sale. It was like literally after the webinar, they didn't even, I mean, it was fully committed in, I mean, I think maybe just that first webinar. I mean, that's how well done it was. That's not common.
Wow.
So you had a pretty large team that you were working with at the time. Were there personality traits or something that you could kind of pinpoint, well, this lady's going to be great versus this guy that is too much of a whatever, probably not going to raise capital very well?
Yeah, that's actually a really good question, and an interesting dynamic. I got exposed to the whole sales team concept when I went to work in the oil and gas company, and it's a certain kind of personality type, or you would think, that could raise money for something that risky. You would think you would need to be super overly aggressive, but I actually encounter a lot of the people I worked with when I was doing that years and years and years ago, but that was 2003 to 2006. Ultimately, I'd say probably 60, 70% of them came and worked for me for a period of time, and just broad range of personality type. But to answer your question specifically, what I found was there wasn't a be-all, end-all personality type. There are certain actual sales skills and techniques that anybody can apply, but the ones that are successful don't try to be somebody or something they're not in their persona. They simply use their personality traits to be as effective as they can. And what is helpful, especially in a sales team environment, is not all personalities match up with all people. So you could do team closing where you would, maybe you're working with an investor that's seriously interested, but your personality doesn't directly, maybe you're an aggressive, fast talking type of person, and the investor is kind of maybe older, slower, more calm, that they're automatically, the rapport is not going to be there between the two, but yet the guy's interested. You could have someone else that's kind of on the slow, low end, personality type, be an effective salesperson, but a polar opposite personality type. Turn around and call that guy, and at the end of the phone call, the guy's investing just because of the rapport. And without having a team of people, you have to be sort of in the middle, and you need to listen. You still need to do all of the things you need to do and say in order to When the person says yes, the sales process is over, and just all of the things you need to be able to do when you're selling, but adapt to their personality type. If somebody is slow, you better not be talking fast. If somebody's talking fast, you better not be talking slower. They're going to start talking over you.
I find it interesting that, like, you said it was based on rapport. Did she, or anybody for that matter who's been successful, do they do mirroring techniques? Are they morphing their personality? Or what are they doing to build that rapport? Like, and I'll just use myself as example. I feel like I can get along with anybody, but I don't subscribe to any kind of particular technique. I'm not that skilled. So I'm just curious as to if you noticed a specific. Yeah.
That's a very good point and question that you brought up, because it depends on the sales situation. So, for example, when I was raising money for oil and gas, and when we had our own sales team, this girl was not part of our sales team. She was just sort of somebody I encountered that I was very impressed with. But it's, if you're talking to somebody one-on-one, that you're doing a Zoom meeting like we are right now, or a Zoom meeting where we're all talking back and forth like we're in a one-on-one meeting, is very different than doing a webinar presentation. Where you're presenting, you're not having a conversation. It's also different. Oops. You there?
Yeah, we hear you.
I lost the screen, just blanked out. Sorry about that. Went totally white. It also is very different when you're up in front of a room on a stage and you're presenting. And so it depends a lot on that. Because, like, as an example, probably the number one most effective strategy is if you can present yourself as an expert. Most of these people, using this lady, her name's Keely, that I'm referring to as an example, she did a lot of public speaking. So she was already revered as an expert. The people that were coming on, including myself, the people that were coming onto her, presentation scenario, already respected her because she's presented herself as an expert. So she automatically had rapport. If she didn't have rapport, you didn't join the webinar with her in this situation. It makes sense. And people loved being around her. She's just one of those people. She was very successful, knew her stuff, and she had a lot of respect because she did a lot of educating on a stage and did podcasts and things like that. It's very different from that when what I was talking about, let's just use the oil and gas business. These were not relationship engagements. These were cold calls. You're calling a stranger in some other state and whatever, and you're totally just trying to grab their attention and get them to agree to look at a highly speculative oil and gas deal. That is a completely different scenario where the rapport gaining is important, that you can do it quickly. And if you don't match with their personality, with your tone, talking to them, because you're not meeting them face to face. You don't want to meet these people face to face because it isn't going to work out good. In that scenario, it's different. And it's also different. Again, it's just where and how you met the person has everything to do with the rapport you're going to get. So if you meet somebody at an event, and depending upon what you are doing at the event, are you a vendor, or you just a participant and you meet somebody there, or are you at a bar and you meet somebody in general conversation? My partner is a hunter, and like when he would talk to anybody, he would always say, "Hey, do you like to shoot?" This is just an example. And if they said, "Yeah," you go, "Hey, let me take you to the gun range." So he's using a common interest for the purpose of gaining rapport. And out of 10 people that would go shoot with him, 8 or 9 of them would invest, because that's what he did to gain rapport. He quickly found out, and if they didn't shoot, he would say, have you ever tried? And then he would take them, and that would give, it's kind of a non-business way to gain the rapport. And he spent a little more time on the front end to get there than others. And it doesn't matter what the industry. Another guy did boating, so he would go to a lot of boating. So anybody that does boating is going to have rapport with a guy that's into boating.
Do you think you can build rapport through a webinar, or do you think it really has to be that one-on-one interaction?
I mean, honestly, you are more of an expert in this area than I am. But yeah, absolutely. I mean, a webinar is just a kind of television version of being on a stage, right? I mean, the presenter is automatically assumed to have some level of expertise, the fact that they're conducting it. However, it's the way that they organize their presentation. Is it straight to the point? Do they have any sales knowledge about the way they go about presenting it? And it's their competency, and the way they present it is going to dictate the rapport they gain. But what I found, and some people are expert at this, and, by doing, a lot of online communications, that they are able to gain that rapport, but over a much longer period of time before they may actually reach out to you. And this is what I used to tell my kids. I taught my kids how to sell by doing a lemonade stand. I said, you can sit in the neighborhood and wait for some poor Joe to walk by who's thirsty, or you can go to a busy intersection and set up a professional booth, and you can either sit in your chair and wait for somebody to buy, or you can stand up and be a cute kid with drinks in your hand and sell them. Walk up to their window and hold the drinks out. So it's kind of, to me, the webinars is sort of waiting for somebody to buy versus selling. So yes, I think it works. But anytime we would do a webinar, or anytime I did a lot of public speaking to support the sales team, behind the effort of the webinar and whether you're a solo person or you have other people helping you raise money, doesn't matter. If you do a webinar and you don't follow up with contacting every single person you sent the webinar to, then you're going to get only 10% of the results that you would have gotten if the day after the webinar, you're calling everybody that you sent the webinar to. You're literally going to get 90% more people engaged by being proactive instead of passive.
I want to pass this back to Jillian, our pro at social media and webinars. It sounds like a lot of what you coach people on in terms of, then we just lost her completely. So never mind. She's like, I don't want this. No, I'm
not taking these calls. It's too much pressure.
All good. Well, I am so impressed with one thing that you've always done consistently through time. So I'm just going to ask you to do it for all the viewers and listeners. A little bit of training by Dr. Seuss.
Yeah, it's funny. A lot of people don't know this. I found it interesting, and a lot of corporations use the Dr. Seuss book, Green Eggs and Ham. It's a sales training book. It's written for kids, but it's actually used in major corporations. We used to use it in our in our business as well, training our sales reps. And it's in the book, the Sam I Am, actually, there she is. Sam I Am is asking this guy to buy green eggs and ham, and he goes through all of these different scenarios of why he should, and goes all the way up to the 12th no, and on the 12th try, the buyer finally says, "Okay, Sam I Am, I'll try the green eggs and ham." And then after he did, he's like, "Wow, I like green eggs and ham. Thank you, Sam I Am." And the point of that is successful salespeople will ask for the purchase, ask for the sale more than 6 times. More than 12 times is a waste of money, a waste of time. I'm sorry. Beyond 12 no's, you're just wasting your time. You're not going to follow up. My partner was that Sam I Am guy. I mean, he never heard no. It never discouraged him. But that's where I think a lot of this, just to kind of take that into context of, modern technology, that's where I think the drip campaigns, the ongoing webinars, is you're basically getting these people, even though you might not be engaging them in a direct one-on-one sales conversation again, you would in an oil and gas shop. But nowadays, as people are continuing to see, you're sending new information, you're getting them to rethink things. And then, if you then reach out and follow up with these people and actually physically talk to them, I'd say that's the missing link with a lot of what I see going on with people trying to raise money using portals and marketing and emails, is that there's got to be a human being behind all of the marketing that somebody ultimately connects with. And the sooner you can make that connection, the faster the rapport can be made. But yeah, I mean, I wouldn't keep calling people beyond the 6 no's, because I was pretty good at figuring out if I'm really wasting my time or not. But if I felt like the guy or gal was qualified financially, the investment that I was talking to them about met their objectives, and they just didn't really understand it, I would continue to pursue them. But if you just give up right off the bat, then, you're going to have very moderate success.
Mm.
So Jillian, Nate was trying to flip it back over to you, and then you just, checked out.
Oh,
She ran away on us.
No, I appreciate that. So I mean, like, I want to go back to the green eggs and ham story. Like, I used to viciously read that book to my children, right? Like, I'd get angrier and angrier and angrier. I was a very dramatic children's book reader to my kids. Yeah. And the more dramatic you get, the funnier it is to children, right? But to adults, it's not so funny, right?
Well, kids are the ultimate version of Sam I Am. If you take your kid to a store and you wheel them by the toy section, and I used to do this with my own son, and he just was the ultimate salesperson. His name's Kyler, and I would say, Kyler, we're going to go to the grocery store, and if you see any toys, do not ask me for anything. Do you understand? Yes, sir. Then I'd get to the grocery store. Remember, what did I tell you? What did I say? Don't ask for anything. And then, so now I'm just making sure you remembered. And then I'd have my older son there, and I'll go, look, watch this. And you go drive by the toy section, and he's like, Dad, I'm not asking for anything, but can I look at that? Can I look at that toy right there? And then, and now he's actually starting to sell you, because now you go, oh, this is so cool. I wouldn't ask to buy this, but man, I wish I had one of these. And, that's the green eggs and ham clothes. And he wouldn't stop. I mean, I would tell him, I'm going to spank you. Do you understand? Yes, sir. But, he would just keep asking.
Okay, but let's talk about that for a second. He'd keep asking, and phrase it in a certain way. I mean, how does that translate to adults? Can I call you next week? Do we mind if I follow up next week? Or do you not even ask for the follow-up? You just do. Like, this is where I work with entrepreneurs who get shy on social media. And their big thing is, it's never because they're actually shy. It's because they're afraid. And what they're afraid of is annoying people. And I tell them another Dr. Seuss thing, oddly enough, which is, those who matter don't mind, and those who mind don't matter. So you might as well be as obnoxious as you possibly have time for on social media, because those who mind don't matter, and those who matter don't mind, right? You could say it either way. And it's true, but it's different when it's like one-on-one, when you're picking up that phone and going, hey, just following up again. Where do you draw that line? What's too much? How far do you push it? And especially when it comes to raising capital, because when it comes to raising capital, we really have to be careful, because there's laws, there's, buyer's remorse that can turn into everybody's remorse when it comes to investing, right? Who hasn't, I'll defer to Nate on this. What sponsor do we know that hasn't had that one $10,000 investor who blew it all up for everybody because they decided that they didn't want to be invested anymore, or what have you? So yeah, where do you draw the line?
Yeah, that is, it has to do with your personalities. Not everybody is wired. That's the thing. It's just not everybody is wired to do the green eggs and ham close. And so what a lot of people do to do that is with drip campaigns, because you're trying to present your message differently without irritating them, or maybe they're just passive personality and they don't have the ability to pick up the phone and call. How much is too much? It's whatever you can tolerate. And I can tell you just personally, my partner, he wanted to bring the sales process to a close as quickly as humanly possible, meaning whether it's a yes or whether it's a no. And if it's a no, they just don't have enough information. That was his mentality. And I'll give you an example. How much, what about, do you call them next week? Do you do this? It would be sometimes, I'm just going to use an oil and gas example, which is different than normal people are trying to syndicate things. But like, what's too much? You would be cold calling these people. You're a stranger to them. There is no rapport on the front end. You might get somebody to slam the phone on you, tell you to go pound sand, hang up on you, and you call them. You'd be surprised how many people would invest that just cussed you out, hung up on you, and the salesperson had enough, confidence.
Cojones? Oh, confidence is better.
Confidence to pick up the phone and call them back and say, hey, I'm just calling back to apologize. My secretary must have accidentally disconnected us. Listen, and then you go back in on them. You need to listen to me. So that's a different kind of sell than a typical syndication. But the point is that the motto in the room is they either buy or they hang up, those two. So that's an aggressive sales strategy. And that totally went against my personality. But the people that trained me made me call them back. And if I got off the phone and they didn't buy and they didn't hang up, they would make me call them right back. And you want to talk about getting out of your shell? They wouldn't allow, for 6 months, I wasn't allowed to have a chair. I sat in the hall. I stand in the hallway, where busy place, a lot of people walking around, noise, and then I'm supposed to be effective. And everybody can hear you. There is no hiding in your room. And everybody's critiquing you because everybody's more experienced than you. That's kind of how and they would make me sometimes stand up on the desk and yell at these people. And then they would buy, and I literally, and that made absolutely no sense to me. So that's kind of where my origin was, but it was not I was not a green eggs and ham guy. Like, I didn't want to do that. So I tried to become more of a storyteller and take some of the principles, those aggressive principles that I learned, and how could I do that a different way? Is there any, and I wouldn't have people, if somebody hung up on me, I don't want to talk to you, but I also wasn't really hardcore cold calling people once I left the oil and gas business. It was more kind of public speaking, just obtaining leads in various different ways other than just cold calling people. And so you wouldn't have that kind of experience, nor would you need to be that aggressive, but you still have the same thing. People put you off as long as you let them. And, you have to be able to create a sense of urgency. You can set an appointment with somebody for next week. And then if you have some sales skills, you just call them back off the fly in advance of the appointment, even though you have one set. Hey, I know we have an appointment next week. I have a situation that just came up. I need to get a hold of you. I know you're looking at investing $100,000 or whatever the case might be. And we're down to the tail end of this now. If I don't talk to you before next week, there's a high probability that, and you got to have something that's true, right? But by using your sales skills, you can always have a reason to reach out. And then by doing that, you kind of interrupt their train of thought. You prioritize making the decision on this. It doesn't come across as pushy or irritating. If you just keep calling somebody day after day, my partner will do that. Like, he doesn't care if he irritates you. If you're not picking up, he's like, he doesn't understand. He'll call them back multiple times the same day just to get them to pick up the phone. And he's effective. But either the people he works with, they either hate him or they are totally like respond to that kind of personality type,
I will say that he will ring 3 times in a row if you don't answer the phone, because he will get a hold of you.
Yes.
Whether you want him to or not, he will get a hold of you.
Doesn't matter if it's a sale. It's just, that's how he is.
Oh my gosh, that's hilarious. That's great. Unbelievable. Eric, I want to really go backwards, because I had said I had, 10 questions, and I was going to start at the first, and then I just kept going forward instead of going backwards to my other 10 questions. So here's one of them. You keep mentioning that the oil and gas business is a risky business, and you don't know anybody who's ever made any money in that business, which is, I find, same, actually, oddly enough, same. But I don't know why it's so risky. We all use oil. We all use gas. It's a commodity. We know we need it. Who's the guy who owns the Dallas Cowboys? He got very wealthy, buying land in California and being like, I think there's oil under here. Right. So, and got very lucky with that. Why is it so risky when it is such a known commodity?
Mm-hmm. There's a very big difference between Jerry Jones and the amount of capital he has and the people, the companies that he's partnering with, wow. Piggybacking on the Exxon Mobil Shell drilling strategy, which is they take a massive multi-billion-dollar budget and then allocate how much money for each project they're going to allocate over all these various different projects, which factors in all of the failures that are going to occur by hitting dry holes and marginal producing wells and things of the sort. And so the mom and pop investor that's investing in a promoted oil and gas deal that is marked up to begin with, it's just risky to begin with. You're putting your money down in a hole. There's different aspects of, I'm talking about drilling projects. You can invest in oil and gas royalties and be making cash flow the next month. It's different. But you're recovering your capital back before you're actually making capital, but you can actually sell your royalties. You can do a 1031 exchange out of royalties and into real estate, or out of real estate and into royalties. It's really considered a real estate transaction. I'm talking about drilling oil and gas wells. Doesn't matter where it is. Doesn't matter how proven the field is. The chance of you drilling enough of them at the promoted double and triple markup of what it actually costs. There's a running joke in the oil and gas industry. If you're a promoter and you have people raising money, there's 3 people that make money in oil and gas: the promoter, the broker, and the investor. 2 out of 3 ain't bad. That literally is the joke. And the investor was the one that rarely ever made money. It's just the people, there's no strategy to the way these investors invest. If you were to go, okay, I'm going to drill the next 100 wells with you guys, and I'm going to put $50,000 into 100 wells, they still probably wouldn't make money because they're promoted. Even the ones that worked versus the ones that didn't, because you're paying double and triple. And nobody does that. And they wind up putting more in one and more in the other. That's all dependent upon how aggressive the salesperson was that was getting them to invest. They're no, hey, let's put the exact same amount into this many wells. And no standard investor that is just buying based on emotion, because that's the only kind of people that invest in that kind of crap, is going to have some actual strategy. Like, how much money should I play blackjack with? Okay, well, if I lose this much, and I'm going to come back 100 days in a row, and I'm going to have a $200 budget per day. And as soon as the $200 is gone, or if I hit this limit, I leave. That's kind of what it takes to succeed investing in that arena. Nobody does it.
Wow. That's crazy. That actually, so if what I'm hearing you say, you can correct me if I'm wrong, is nobody should be investing in oil and gas unless it's with a major player, period. Buy stock in Exxon. That's way better.
No, because for some people it's fun.
To lose money? That's never fun, sir.
You know what? I have to throw out a different one. You're really talking about wildcatting. You're talking about drilling the holes. There are other deals that are more royalty plays where you already have producing wells.
Royalties is totally different.
Completely different.
Yeah, because they're an existing portfolio of producing wells that they may go put more online, but you are buying existing production on royalties. And it's not all wildcatting. It's just drilling a hole in the ground, even in a proven area like the Barnett Shale, which is everywhere around here. It's you're going to hit every well. It's going to produce natural gas, and then it's going to fizzle out in most cases before you ever get your money back. An oil and gas drilling project is, I'm going to put my money down in a hole in the ground, and then the hole in the ground is going to give me my own money back, a return of my money, not on my money, until I get my money back. Then I have a return. So like, if you're trying to be making money, you want an asset that can produce a return that has intrinsic value. That isn't oil and gas. It is the case in a royalty. It's not in a drilling project, because you got to get your money back before you actually can make a return. So let's just say you were making a 50% return per year, right? Well, it's going to take 2 years to just get your money back. You didn't make any return. You just broke even. And then if it happened to miraculously continue to do the same thing for the next 2 years, now took 4 years to double your money, which is if you were to make 50% for another 2 years, your average return for 4 years to double your money was 25%, not 50%. And these people that used to raise money, I would explain that to them, like, you're not getting these kinds of, and none of them would do it. I mean, just, they don't produce the same thing. All kinds of things happen. All kinds of problems happen that shut them down. And,
learned my lesson in the law firm. There's only two types of deals that we won't do: oil and gas, wildcatting, and mine deals, both with the proven reserves that never quite seem to work out.
Right. Movie deals is another one.
Hey, Nate, that's pretty interesting. You guys won't, oddly enough, I just met an attorney probably like a month ago who's a successful mining attorney, which I was like, really? So tell me what your experience is with you've never found a mining deal that worked out, or?
There's just too many of the very similar to what Eric's talking about, the three people that can make money, the promoter, the sales guy, the investor. The investor is last in line. And so just and I used to practice for a decade in Las Vegas. There's mines and mineral deals going on all around there. And the number of fraudulent mine deals, the number of investors that just got hosed, it didn't make sense to put myself at risk, the firm at risk, knowing that so often it doesn't work out. Now they're legal. I'm not saying that they're not legal, and a lot of attorneys do make great money doing this.
Mm-hmm.
I just rather not have just the emotional loss, feel for the investors that goes along with I don't have that doing another real estate deal.
I mean, there's so many aspects of any of these deals, mining, oil and gas. It's not just, including the law side of it. I mean, you might be, if the lawyer you're referring to is working for the construction group that is going to be doing things, and he's organizing their legal work, is different than having some promoter going to put together a deal for individual investors to invest in his highly risky mining deal. That lawyer is also putting themselves at risk, because the chance that something bad's going to happen from a wide variety of things, including unethical behavior, is high.
Mm-hmm.
Like oil and gas, you can invest in drilling holes in the ground, whether it's out in an open field with no proven reserves, that's wildcatting, or you're drilling in the Barnett Shale where every single well has hit natural gas. Well, yeah, it's a rock. You're going to hit the rock that produces natural gas. That doesn't mean you're going to make money. Or you can also invest in every single well you drill produces water, right? So you have to dispose of the water. So every producing well, that's a lot of reason why wells get shut down, is because it's producing so much water, it's not economically feasible to keep hauling the water off, because you have to have saltwater disposal wells. So you could actually invest in saltwater disposal, not the drilling, not the royalties. There's a lot of different avenues in which you can participate, in the oil and gas industry, besides just, and even those, you would think that's almost a guaranteed win, is since every well produces water, and the failed wells are used to dispose the water into a saltwater disposal well, you would think that there'd be almost no way to lose money. But even that, most people, that usually doesn't actually become economically viable either, for anybody I've personally known.
Well, then I'm not going to do it. I'm not going to invest in any of those things.
I would not recommend it, unless you just want to have fun gambling and you like the excitement. Then just whatever you're investing, just be prepared to lose it, and you get a great tax write-off. But tax write-offs are there. People, that would be the big pitch. But like, okay, if you're in a 35% tax bracket and you invested $100,000 and you have a dry hole, you're going to get a $35,000 tax write-off, 100% of your tax bracket, not 100% of your investment. So you still have a 65% capital loss. Like, what a stupid decision to use to invest, unless you find it exciting and you are doing it because it gives you entertainment, like somebody would want to go on a vacation. They're not going to get a return on their money. Some people that invest in this stuff, that's what they're doing. Others have a gambling problem, to be honest with you. I mean, you can see the way they respond. They're not using judgment and common sense or any kind of financial logic of any kind. There's a lot of other, things. It's just investing in projects is risky enough. Doesn't matter what it is. Look what's happened over the last few years with the interest rates going up. You can do everything right and have a market situation cause the risks. In fact, you learn what the real risks are that you didn't know before when some change in the market happens, which, we got hit by it as well. We've lost some properties. There has been capital losses. Mm-hmm. Those things happen. Nobody wants it to happen. It's just, if you don't want those things to happen, don't invest. Because all investments have risk. Doesn't matter what it is.
See, I'm gonna.
I know people like
from
this.
All this is I am Sam. Sam, I am. I will not invest in oil and gas.
Wait. No, yeah, but you can't get to the end of the book on that one.
Yeah.
No, I'm going to cut it off at one no. Click.
Yeah. Yeah, exactly. Don't answer. Then block that number.
It's really hard. It's especially when, it's like you jump in a ring where people are already swinging at you and you just come out, and like you get hit and then you just jump back in. And I mean, that's kind of how that is. It takes and most people, that isn't their personality, right? You have to be made to do it. And man, I'm grateful that I was pushed to do that, because I would have never gotten the experience. And then once I wasn't being made to follow their methods, I was able to adapt them to my own personal style. And I went through that kind of intense training, I guess. It's like a boot camp, I guess, for probably the first 6 months out of the 2.5 years I was there. And then I became very effective using my own style, but still having the confidence I learned from being made to do things that I otherwise would not do. So you can learn it even if it's not your personality.
No. I mean, I like the drip campaign idea, to be honest with you. I like applying this to a drip campaign. I think that's what a lot of our clients would be really, comfortable with when it comes to raising capital. And honestly, for them, that's what I'm comfortable with as well, because you cannot, in my opinion, applying high pressure sales or really, in your face sales. Not saying that is, green eggs and ham is an in your face book, right? Mm-hmm. But if you're in somebody's face where they can, shut their laptop or they can ignore your email, is a lot different than being truly in front of their face or even calling them. And there's inherent legal risk there when it comes to raising capital. So if we're going to apply it to raising capital, I would say drip campaign's the way to go. And Lord knows we do that enough at Capital on Command. I have gotten the emails that are like, stop emailing me. Mm-hmm. And to me, I'm like, there is an unsubscribe button right at the bottom of this email.
Yeah. Well, let me interject something into what you're saying, because I just want to be clear. We're talking about one type of highly aggressive sales process that is required to actually raise money for that kind of an investment under the way that you're meeting people, which is cold calling. So yes, you have to be very aggressive.
Right. Yeah.
But that is not, I just want to make it clear that if all a person does that, let me just give you an example. Let's say you're doing an acquisition deal and you've identified a property, you've got it under contract, you have a certain period of time to do your due diligence, you have a certain period of time in which you're going to close. And after their due diligence is done, your money's going hard, you must close, you must have all the money. So the pressure, it's not high pressure sales. There's a difference between urgency, a legitimate reason for urgency, and high pressure. I'm not the one putting pressure on you. There is a clearly defined closing date where we must have the capital in, all of it, 2 weeks before that closing date. It's not your fault that you're calling them back. Hey, Mr. Jones, I apologize. I know we've had a couple of conversations, but we are coming up on our closing date. It seems like you're pretty interested, but we're still about $350,000 away from hitting our goal. And I was wondering, I know you were considering 100, maybe you could just come in for $50,000, give us a shot at your business. That's not high pressure. That is just using some sales skills in a professional manner that can get somebody to make a decision, and they might wind up being a good long-term investor. It's always hardest to get the investment the first time, but what I will tell you that I can guarantee you, there is no drip campaign that will take the place of a phone call to communicate with the person. Again, it's waiting for somebody to buy versus selling. The drip campaigns without the follow-up, like if you do not follow up and reach out and touch someone, then just understand that you are going to have 1/10 of the response than if you call the people. Hey, we just sent you an email. I just wanted to follow up. I don't know if you had an opportunity to look at it or review it, but we've got a project coming up. Just wanted to grab a couple of minutes. This is basically what we're doing. My understanding is you've looked at this type of investment in the past, whatever you're going to, but if you don't do that, instead of 10 investors for a period of time, you're going to get one, just the one that happens to click on the button and go to the portal and automatically not need to talk to anybody and make their decision and then just invest. Like, you'd be lucky to get 10%. Oh, if that's all you're doing. Webinars is another way to the drip campaign than a webinar. Now you're going to see who's interested. So then they're going to sign up for your webinar, and then half of them are going to show. So you had 100 interested, 50 show up. After the webinar, you send it to everybody, right? The recorded version. But who's your first 50 calls? It's the ones that attended. Who's your next 50 calls? The ones that didn't. But that's your hot lead list for follow-ups. You might have sent it to 3,000 people. You don't need to call 3,000. But the people that were interested, they just told you, I'm interested. I'd like you to follow up with me, please. Because I'm too busy. I'm not going to remember to do anything after I get this email.
Okay.
Does that make sense?
Yeah. Yeah. So you got, yeah. So, I mean, but that goes back to the speed thing, right? Like, you got to be fast.
Well, you may not have a choice. That's what I'm saying.
Right.
Like these people, once you have 200 or 300 people that have invested with you, which takes years to accumulate that many people, then yes, you might be able to send out an email campaign, especially if all you've done is decent to a good quality job and they've seen cash flow and they've seen results. Then you might send one out and it might get fully subscribed without any direct engagement verbally. But if not, it's just not going to happen.
Mm-hmm.
You have to, you have to put all the effort in on the front end to accumulate that base of people. And it's a tough business, right? Because it depends what you're raising money for. In the oil and gas business, there was no building a client base. Every client, all the clients, the only time you have with them, unless they're freaks and they have a serious or whatever, but you have only the honeymoon phase. You have to get them to invest in as many things and as much as possible during the honeymoon phase as possible, because when the results phase starts, they will stop investing based on the results they're getting, because it's a highly speculative investment. And you tell them literally on every call, you can lose all your money in that investment, right? But you can lose your money in any investment. But the point is like, hey, if you do a really good job and you have an investment that is, you can manage the risk better, then you can actually build up a base of people that will respond. And when they send an email communication out about their next deal with a pre-recorded webinar, people just subscribe because they know it's going to disappear because they've missed previous deals because you didn't respond quick enough. That takes years to build that up, but you can. And I've absolutely seen that happen with a large number of people.
Well, love all of your insights. So really, truly appreciate you being here today.
Oh,
Do you have any final thoughts that you'd like to share with everybody?
No, just, the biggest thing is just, reach out and touch someone. Don't just rely on electronic marketing alone. It is absolutely needed. You got to have it. That's the age we're in. Zoom is very, very effective. Try to put yourself in a position of authority, which will allow you to gain rapport with the audience that you're in front of. And when you send a campaign out, especially if you conduct some type of an event and you have, a registration feature, then those people are your hot leads. Those are the ones you need to follow up and call. And hosting webinars is a great way to find out who's interested in what you're sending to begin with. You should do a webinar a month, and then you're creating a follow-up lead list. that's probably my best advice, for most people that are starting out.
Yeah. That was awesome. Thank you, Eric, so much for joining us.
Pleasure.
This is the
Anytime.
Yeah. This is the Entrepreneur Podcast. Catch us on a episode next time on all things that you wish you knew when you started being an entrepreneur. Bye, everyone.
Bye.
See you later.